Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in tonight's free video I wanted to share a couple of concepts with you that I have found very helpful in my trading in regards when you might ask yourself the question, am I wrong? Because of course, not every setup you're going to get into is going to work out perfectly, and you like to know at what point should I be giving the trade a little bit more room to work versus what point am I actually wrong in this, and I thought today was a good point to discuss that. So in charts like Whole Foods, and I'm going to use two tickers that I discussed, or actually maybe three that I discussed last week, and just follow up on them. Because I think when you start with the idea and then you follow through with it, that is the best way to actually see these ideas to fruition. So for something like Whole Foods, when I look at this chart, this idea is absolutely still in play, and I don't even have to get too far down into the intraday analysis like we'll do with some others. Why is that? Because we are still staying well below the 21 EMA, and we haven't even come back to tag that yet. So as this continues to consolidate below our key moving averages, I will see any move back up into that as resistance, and I don't have to get too far into the idea of, am I wrong in this yet? Because the squeeze is still coiled, we still fit the original setup. Now in the case of Disney, this will be an interesting one to follow, because when we look at it here, today was a great day, and this was right in line with what we were looking for from Friday night's video. But the problem with this, or something that I have seen, especially for people that would prefer to follow the risk up a bit more closely, is that when you get down into areas like these previous lows, areas like your skyline, they tend to be areas where you can bounce from. So if you want to trail up your profits, how might you do that? As we're coming down into multiple time frames is something I have found very helpful, and in the case of Disney, this will be worth watching tomorrow. And I like coming back, looking at symmetry. So in Thinkorswim, these are labeled as fib extensions, but all you're really doing is coming back and measuring what a stock's personality is like. So off of the 15-minute chart, we can see that Disney is still in a nice downtrend. I do like using the 15-minute for swing-based ideas. And when you look at this trend, all I'm saying is the stock has rallied a given point value and hasn't been able to shift the trend. Okay, within that, that's going to give us a level here at 95. If we come back a little bit further in time and compare the exact same take on this, we're going to see another level very close to that. You go back and you start to run these charts. Here again, for me, the 15 has always been very helpful just because I found it to be a good swing trading time frame. But when you start to see the clustering of these, well then you know this stock's personality has been bounces that can exceed 95 to 95 and a quarter. Ultimately, what I would say is that if you clear this previous swing high, not only have you cleared symmetry, but you have shifted off the 15-minute chart, and that gives you a reason to wrap up your risk. Now, provided we can go ahead and hold that, I'll look for continued downside, but that is a conservative way to manage your risk. So those are the two that I had looked at to the sell side, and then taking this concept but flipping it in the inverse, let's look at Home Depot. Because for this chart, we're still absolutely following the buy side setup on it, and everything inside of it still looks very good. However, if you don't want to come in and buy it while it's below the 21 EMA, what's another way you can trigger yourself into this? It's exactly the same analysis we've done in Disney, but you're looking for it to do just the opposite. You want it to come up and clear this symmetry. So if we use the exact same drawing tool, all we're trying to say, and if you're kind of lenient with your channel, you can see the downward price action that we're focused on, and the rally from 133.92 up into the levels where we closed at today. So this swing low to swing high, I can see that's already been cleared, so there's no reason to focus on that. This, however, would not have been cleared. And then we'll have one more level right here. So if we can come up and clear this resistance, that's going to give us a better confirmation that the daily chart is going to work out. So if we can clear 135.70, about 50 cents from where we're currently trading, you might say, well, if I let it go that 50 cents, am I still going to have an opportunity to get involved in this? Is I giving up too much? Well, absolutely not, because if you're able to clear resistance and the daily chart is going to play out, we'll look at an ultimate target there at $140, or essentially a break to new highs. I think selling into new highs is great. Buying at them is something I have no interest in doing, so I will entertain these buy setups down here with targets in this area, and using that 15-minute chart to help time you into those can be very helpful. So I hope you found that beneficial, something you can use in your trading. If you have any questions, please don't hesitate to email me. Otherwise, I will see you guys at the next free video.